All right, today we are going to be talking about Joe Biden and his proposed tax cuts if he gets elected into office, what those look like, not only from an economic standpoint, but from an actual legislation standpoint, what that means for you as a taxpayer, what that means for you from an income standpoint. So one of the main points that Joe Biden wants to kind of use to really overhaul the tax planning for accountants, that would be us, but is moving the top bracket up to 39.6%. So if you make over $400,000, he's going to move that tax bracket up a little bit. Not sure what that really means other than you're going to be paying more tax, but there's some things, for lack of a better term, that are going to offset the increase in the top bracket. Now, another thing he also is going to do, he's also going to subject the amount over 400K that's you make in income to Social Security tax. So currently, only $137,000 roughly is subject to Social Security tax on your wages. The amounts over, he's proposing that the amounts over 400,000 would now be subject to the 6.2 Social Security tax. Okay, so that's a pretty substantial change. That could have some major implications for incomes that are over that threshold that are going to be subject to that extra tax. I mean, that's going to change a major part of how you plan for taxes and kind of allocate the funds that needed to actually pay the tax at the end of the year. So that's something to watch out for. Another issue or item that he addressed is the 1031 exchange for real estate investors. So if you're a real estate investor, you probably have done a 1031 exchange in one facet or another. And what that really means is you're deferring the taxes that you would have had to pay on the gains that you made on an investment property. So for example, if you had an investment property that you bought for $1 million, it was a rental property, residential, commercial, and it's now worth 1.5, and you decide to do a 1031 exchange, that $500,000 of gain is no longer deferred if he repeals a 1031 exchange. I don't understand how they could do that, because that's one of the greatest attributes of real estate is doing 1031 exchanges, but it looks like part of this program that he wants to implement is coming after some real estate investors. So that's something to keep an eye out for. Not something that Trump wanted to take away at all. Obviously, part of the TCJA, the Tax Cut and Jobs Act, 1031 exchanges are alive and well. Now, there are some states that don't honor 1031 exchanges, like Pennsylvania, for example. They do not recognize a 1031 exchange. So at the federal level, we'll see what happens. Stay tuned on that one. He also wants to remove the step-up in basis that happens when someone dies and passes down property or stocks or bonds or whatever the case may be to an heir. So how that works is, let's just say that you own a property and it's worth, let's say you bought it for $100,000 and now it's worth $500,000, and you pass away and you're passing it down to your heirs. Well, now prior you would have a new basis at the date of death of $500,000. That's the fair market value of that particular property. So the person bought it for $100,000 and now it's worth $500,000. So the new basis is $500,000 under the old law. He's proposing that you would have to pay taxes on the capital gained amount from $100,000 to $500,000. So that's a huge change, massive change in the tax code. Obviously, he's proposing that this goes to benefit the economic environment, etc. But that's a massive change in the tax code. Another point back to what I talked about on the 400K mark, he also is proposing that for capital gains, if you make over if you make over $1 million, you would have a capital gains rate equal to your ordinary income rate. So technically speaking, 39.6% you'd have a capital gains rate of almost 40% as opposed to 20% where it is today. So double, 100% increase on the capital gains rate if you made income, if you had income over $1 million. He also would move the corporate tax rate from 21%, where Trump implemented this 21% corporate decline rate, to he would move it back up to 28%. So 7% increase, 33% really increase in the corporate income tax rate. So those are a few of the tax law changes that his administration is proposing. Obviously, it's going to take some time to get it implemented. They're not going to happen right away, but they could, if this is one of their agenda items that is on the docket immediately, there could be some executive orders that are placed and whatnot, or passed through some form of overhaul. So something to keep an eye out for on the major changes. Some of the tax breaks he's going to implement is he wants to expand the child tax credit to $8,000 per child up to $16,000. So that's going to be a massive increase. He would make it refundable and payable in advance. I'm not exactly sure how they would implement the payable in advance portion, but he would make it refundable and payable in advance. He wants to forgive student loan debt, and he also wants to exclude the forgivable amounts from income. So he wants to exclude, he wants to forgive student loans, but he also wants to, usually whenever you're forgiven of a debt, you have to include the amount that's forgiven in income. He wants to make the student loans that are forgiven excludable from income. So they're not going to be included in income at all. So it's like they never happened. He wants to expand the work opportunity tax credit to include military spouses, which we do work quite a bit with military and their spouses. So that's a good one. He wants to enhance the tax breaks and access to 401k plans for people that are actually saving for retirement. So if you're saving for retirement, I believe what this means is he wants to implement some sort of way where if you need the money, not just for hardship situations, that you would be able to access those funds in your 401k. We'll have to kind of take a look at that to see how that's expanded. He also wants to create tax credits for small businesses that are actually offering retirement plans to their workers. So if you're a small business owner and you're going to be offering a retirement plan, 401k, simple plan, whatever the case may be, to your employees, he wants to provide some tax credits to go along with that as well. So that's something to look out for. Like I said, we don't have a dog in the fight here. We're just kind of presenting the changes that that Biden's administration is proposing. Obviously, there would be needed an overhaul in the tax planning. I think we would be tremendously busy in that regard for clients and prospective clients that need tax overhaul for the changes that would be coming. As always, you can visit our link below and check out our website. You can always book a strategy call with us through our booking link. It's free. It's completely complimentary, 30 minutes. We'll try to provide value on that call and provide some sort of way to work with you and help better your tax situation. So if you feel free, reach out to us. If not, look out for our videos that we'll be posting now that tax season's over. Our goal is to pump out a bunch of these videos, get as much content and information out to you, our clients, and potential clients as we can. So have a great rest of your week, and we'll see you soon.